Hi and welcome to the week ahead with myself, Rowena Harris-Doughty, and our senior market analyst, Jasper Lawler. We're going to be talking about the financial markets and what to look for in the week starting May the 8th. Jasper, let's first of all talk about the French elections. How will Sunday's vote dictate Monday's market open?
The natural assumption at the moment is that Macron's going to win just because polls have him at winning 60% of the vote, Le Pen 40%. That'd be pretty difficult odds for Le Pen to climb. And because Le Pen is proposing a referendum on France's membership of the Eurozone, Macron is the market favourite because we can avoid that disruption. And so naturally you'd assume the euro would rally, you would assume French stocks would rally, probably other European stocks would rally on a Macron win. Mm-hmm. But because it's so priced in already, there's actually a risk that actually we maybe even get a little bit of a pullback just because it was pretty much expected. Obviously, on the flip side, should Le Pen pull off a surprise, I think no one was expecting it at all. No one's really protecting for it. You'd actually see quite a sharp reaction, I think, in the markets. You'd expect probably a big downside move in the euro.
Okay. I mean, it was a rough week for oil markets last week. We saw a massive slide in oil prices and metals. Oil prices, we know they're remaining quite volatile at the moment. We've seen it drop below $50 a barrel. How low can it go?
Well, it certainly could drop below the lows of last year. That would be sub $35 a barrel in Brent. That's not my default assumption, but we've been talking about for a while the fact that it's going to be a bit of an ebb and flow in the oil market, basically, where OPEC cut production, talk about cutting production more. That's a reduction of the supply. But then when the prices rise because of that cut, production in the US goes up, and that supply comes back into the market and the price drops again. So I think that's what we're witnessing at the moment, is it's going to be a range-bound market. At the moment, oil's not really made it past $60 a barrel. I think it can probably at some point, but obviously we're at the bottom end of the range at the moment. And in a range trading environment, typically the highest probability situations are buying the bottom of the range, selling the top of the range. So we're going to get to the point of extreme bad sentiment in oil at some point, and I think that could be an opportunity.
Okay. We've got two central bank meetings next week. We've got the Reserve Bank of New Zealand and the good old Bank of England as well. Are either that interesting, though, to traders, given the whole current economic and political landscape we're seeing?
I mean, central banks at the end of the day do fundamentally drive what's happening in the currencies. The RBNZ, that's, it's a different part of the world. It has its own implications for the New Zealand dollar. But obviously, with the general election coming up in the UK, the importance of the Bank of England has been slightly sidelined. The election has implications for what the Bank of England will do. And so you can interpret it that way for markets. But I think, if you compare, it's all about relative action from the central banks. The Fed have indicated that they're probably going to hike rates in June, even though data has been a bit soft in the US. The Bank of England aren't looking at probably raising interest rates in the UK anytime soon because of all the uncertainty of Brexit. So really, that should be a dollar strength situation, but the pound is up near 130. And I think that's just because, there is less political uncertainty now because the Tories are headed for a decent victory in the general election.
Okay. Is there anything else that's on your radar next week in terms of either macro events or particularly interesting pairs to watch out for?
Well, I mean, I suppose you can say some in terms of the kind of broader picture. You've always got to be watching how the policy unfolds in the US. Mm-hmm. Part of why you alluded to a big slide in metals prices is the sort of slowdown in China is kind of coming to the fore a little bit. And so when we saw some of this big slide in iron ore prices, which dropped over 12% last week at one point, when you see those big drops, it was normally around Chinese PMI data. So I think China watching is going to get a little bit more important in the weeks to come.
We do have Chinese inflation figures coming out next week. So.
Yeah, I mean, that's all part and parcel. And the theme last year was that Chinese government was basically stimulating the economy, but that seems to, the effects of that are kind of fading a little bit at the moment. And there's a People's Congress later in the year. So the general sense is that probably they might try and reflate things a little bit before that. but the data is deteriorating, commodities are falling. So if that continues, at some point it's going to reverberate on stock markets. The only other thing I would mention is that at the moment, S&P 500 earnings are on track for double-digit earnings growth in Q1. And that's the best it's been in a long time. So fundamentally, that's a good story. But obviously, you've got these other things, Chinese growth, what Donald Trump will do to be possibly weigh that down.
Okay, Jasper, thank you very much as always. That's it for this version of the week ahead. Don't forget to subscribe to our YouTube channel and sign up as well to our other social media platforms as well. Joining Jasper, you got a seminar next week? Not a seminar, sorry, a webinar.
A webinar, yes.
A webinar indeed.
Yeah, that's at Monday at 12:30 London time.
There we go. Nice little plug there. Good luck trading. Goodbye for now.